Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's great to have you back for another deep dive into the markets. Today, we've got a packed session with some critical updates from the trading floor, key earnings insights, and broader economic trends that could shape your long-term investment strategy. So, grab a coffee and let's break down what's moving the needle on April 28th, 2026. First up, let's talk about the major indexes and how they performed today. It was a bit of a mixed bag on Wall Street, with the Nasdaq taking the hardest hit, dropping nearly 1%, reflecting some jitters in the tech space. The S&P 500 wasn't far behind, slipping about 0.5%, while the Dow Jones managed to hold its ground with just a slight dip. The Russell 2000, representing smaller caps, also saw a notable decline of over 1%. These moves signal a cautious mood among investors, likely tied to geopolitical tensions and upcoming earnings reports. For long-term players, this kind of volatility isn't a signal to panic. It's a reminder to stay focused on fundamentals while keeping an eye on short-term catalysts. Now, let's shift gears to the big winners of the day among large-cap stocks. We saw some impressive gains in the semiconductor space, with Intel climbing nearly 5% and advanced micro devices up over 3%. These moves highlight continued strength in tech hardware, especially as AI and data center demand remain hot topics. Also catching attention was Spotify, gaining around 4%, despite some softer guidance news. We'll touch on that later. For long-term investors, these names are worth watching, as they're tied to secular growth trends, even if short-term fluctuations can test your patience. On the flip side, not everyone had a great day. Tesla led the losers, dropping over 5%, likely on ongoing concerns about delivery numbers and broader EV market dynamics. Other notable decliners included ASML and GE Aerospace, both down over 3%, reflecting some profit-taking or sector-specific pressures. While these dips sting in the short term, they could present buying opportunities for those with a long horizon, especially if fundamentals remain intact. Remember, market pullbacks often set the stage for the next leg up, if you've got conviction in the story. Looking at the market movers, Nvidia continues to dominate trading activity with a slight uptick, showing its staying power as an AI juggernaut. Tesla, despite its drop, was also heavily traded, underscoring the polarized views on its outlook. Intel rounded out the most active list with that solid gain, suggesting investors are still betting on a chip recovery. These names are the pulse of the market right now, and for long-term investors, they represent core themes: AI, EVs, and semiconductors that aren't going away anytime soon. Speaking of volume, the most active stocks today paint a similar picture. Nvidia and Tesla again topped the charts, alongside Intel and even Nokia, which saw a surprising 6.6% jump on high trading activity. These volume spikes often signal where sentiment is strongest, and for us long-term folks, they're a clue to where institutional money might be flowing. Keep an eye on whether this momentum holds or if it's just a fleeting reaction. Now let's pivot to one of the biggest drivers this week, earnings season. We're in the thick of it, with heavyweights like Microsoft, Meta Platforms, and Amazon set to report in the coming days. These reports will be critical, especially as investors are laser-focused on AI spending and whether these giants can justify the massive capex we've seen. ExxonMobil and Chevron are also on deck, and with oil prices under pressure from Middle East tensions, their outlooks could sway energy sentiment. Earlier today, Coca-Cola beat expectations with strong volume growth, while Centene also impressed with a solid earnings report, lifting its stock significantly. Spotify, however, disappointed with softer guidance, sending shares tumbling despite decent results. For long-term investors, earnings are your chance to assess whether a company's growth story aligns with your portfolio goals. Don't just chase the headlines, dig into the strategy. You can find exclusive earnings transcript summaries on MarketSnap to help you cut through the noise and focus on what matters for your investments. Zooming out to the past week, some large-cap stocks have posted incredible gains. Garmin led the pack with a 21% surge, while Lumentum Holdings and AppLovin both jumped over 14%. These moves underscore pockets of strength in tech and consumer cyclicals, potentially signaling areas of opportunity for long-term growth if the trends hold. On the other hand, the past week wasn't kind to everyone. Genuine Parts plummeted over 20%, and Rivian slid 14%, reflecting challenges in auto-related sectors. Even high flyers like Atlassian took a hit, down over 12%. These declines might spook short-term traders, but for us long-term investors, they're a chance to reassess valuations and consider whether the underlying business still fits your thesis. Let's touch on some broader economic news shaping the market narrative. The Fed is expected to hold rates steady this week, with Jerome Powell potentially giving his final press conference before a transition to Kevin Warsh. Meanwhile, geopolitical tensions, especially in the Middle East, are pushing oil prices higher and stoking inflation fears, as noted by voices like Jamie Dimon warning of stagflation risks. On the AI front, there's growing buzz and concern about monetization and societal pushback, with leaders like Snap CEO sounding the alarm. For long-term investors, these macro factors are critical to monitor, as they can impact everything from interest rates to sector rotations over the coming years. Finally, a quick look at sector performance over the past week. Industrials led the way with a 2.1% gain, followed by consumer cyclicals up 1.6%, showing resilience in discretionary spending. Energy also shone, up over 4%, no doubt fueled by those geopolitical tensions. These sector moves can guide long-term portfolio allocations, especially if you're looking to balance growth with defensive plays. On the weaker side, healthcare lagged with a 0.6% drop, possibly tied to earnings disappointments or regulatory noise. Utilities and financials also underperformed slightly. While short-term sector weakness can sting, it often uncovers value for patient investors willing to wait for a turnaround. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates, in-depth SWOT analyses, and all the insights you need to navigate these dynamic markets. Hit that subscribe button, drop a like, and we'll see you tomorrow for more actionable market breakdowns. Stay invested, stay informed.